Good morning, good afternoon, good evening, wherever you are in the world. Thanks for joining Financial Statements at the Peterson Institute for International Economics. I'm Nicolas Véron. I will host the session with lots of help, of course, with all my colleagues here, starting with Jessica Parada, as usual. There's a lot of turmoil in the world as we speak, so thanks for joining this session that looks a bit aside from what's big in the news, but actually is very connected. We will talk about payments, digital and market infrastructure, and of course, central bank digital currencies. And this is very much connected with what we've seen in terms of sanctions and the financial front of the events unfolding in Eastern Europe. Ulrich Bindseil is the Director General for Market Infrastructures and Payments at the European Central Bank. He studied economics at Saarland University, graduated in 1994, and spent 3 years at the Deutsche Bundesbank, the German central bank, and after that has been at the ECB for as long as humanly possible, and actually longer, because he joined the European Monetary Institute, the predecessor entity of the European Central Bank, in March 1997. In 1998, that became the ECB. Ulrich has worked in liquidity management, risk management. In 2009, he became Deputy Director General for Market Operations and Director General of that department in 2012, so doing all the ECB's activity on the marketplace. And in 2019, he became Director General Market Infrastructures and Payments, which will occupy us today. He's been in multiple international committees, especially in the Basel-located committees at the Bank for International Settlements, the Market Committee of the PIIE, the Committee on the Global Financial System, and I'm surely omitting a lot of major policy affiliations here. I want to mention, however, that Ulrich Bindseil is also an economic and financial historian, and actually has done pioneering work on the framing of the historical thinking about the long history of central banking, and especially the origins of central banking in medieval Europe. So this sounds nerdy, but it's very important. Ulrich has published a number of books about technical stuff about market infrastructure and central banking, but also, as I just mentioned, central banking before 1800 at Oxford University Press, which was published 2 years ago, and which I have to say, and I don't say that because he's here, is one of the books of financial histories that I found most eye-opening and fascinating in recent years, because it's really a reframing of how to think about central banking in history, but also as an implication also in the current circumstances. And more directly linked to our point, Ulrich has published a paper, The Case for and Against CBDC, 5 years later. This is a speech, this is derived from a speech he gave at the Institute for Law and Finance at the University of Frankfurt in January this year. Natasha de Terán studied arts history at the Corto Institute at the University of London. As an art history buff, I am delighted every time we have somebody who has that kind of background on financial statements. She then studied journalism at the University of the Arts in London, graduated in 2000, and then worked as a financial journalist for a number of publications and as a freelance for The Banker, Risk Magazine, Financial News. In 2009, she joined LCH ClearNet, a major London-based financial infrastructure as head of public affairs. And in 2012, she joined SWIFT, the Society for Worldwide Interbank Financial Transactions, telecommunications, not transactions, because it's not about transactions, it's about communications. And SWIFT is very much into news these days, as I mentioned. Natasha was their head of public affairs, and then from 2013, I think, head of corporate affairs until 2019. She was also a member of a number of policy consultative groups at the European Commission, the European Securities and Markets Authority, and other agencies. In January 2020, she joined the Carnegie Endowment for International Peace as a scholar, non-resident scholar in their financial cyber or FinCyber initiative. She's a member of a number of other groups, including the CBDC Engagement Forum of the Bank of England. And important also to mention, as I mentioned, Ulrich's book on central banking before 1800. Natasha is the co-author of an important book about payment systems, the payoff, how changing the way we pay changes everything, co-authored with Gottfried Leibrand, who used to be the CEO of SWIFT. So this session is not about SWIFT primarily. That may come in the Q&A, but we want to talk about CBDCs here. And with that, Ulrich, over to you.
Yeah, thank you, Nicolas, for the kind introduction. And I share my screen, and you gave me 10 minutes, so I will try to cover everything. So, and my presentation is really a bit hybrid. There are two subtopics. One is, in general, the case for CBDC, the little paper you mentioned, but then I also have some slides on the digital euro project, and you can see the hybrid topic already in the title, CBDC in general and digital euro afterwards. And so why CBDC? And that is here the disclaimer applies. It's my work. It's not official ECB work. Here's the link to the little paper. And what the paper does, it really takes up today's arguments in favor and against CBDC, in particular the arguments in favor by central banks, because there are quite some arguments which are made by non-central bankers and that central bankers have never endorsed. So the paper focuses on those of central bankers and then on some critiques that, as they were articulated in 2021 by, in particular, those four authors or papers, Bofinger, Cecchetti, Schönholz, Quarles, and Waller. You may have heard of some of those speeches. And the paper distills, the key arguments against CBDC. And yeah, let me move to the pros. And this is the summary of what central banks would today say. And central banks, okay, I generalize here. Maybe this is ECB perspective a bit, or my own perspective. But I think it's fair to say central banks talk here about means of payment in a digital age. So basically to preserve the continued availability of central bank money to everyone in a digitalized world. Banknotes are not digital. They are, if you want, 17th century technology. And in a certain way, by preserving or by translating central bank money into the digital age, you also preserve what you could say commercial bank money is ultimately, because commercial bank money is a promise to convert a claim into central bank money. So what would commercial bank money be if there would be no central bank money available any longer? That's not so clear. Probably it would just be the promise to convert into different commercial bank money. But is that really the same? Big question mark. So we maintain the two-layer monetary system by translating central bank liabilities available to all into the digital age. In this sense, it's a conservative measure almost, and it would be more revolutionary to not do it. And yeah, one could say that central bank money available to all is also important because you can design it from a public preference perspective, which has an inclusiveness dimension also. Money and payment is not a side issue. It is at the very core of modern society, as Simmel has explained in his philosophy of money in 1900. It's even, you could say, the core of modern society is money, because it allows for the maybe unbelievable extent of division of labor and specialization that we have. So it is a matter of public also preferences and control. And yeah, the one further point, third point on this slide is the competition aspect. Payment is an industry with network effects, typically the predominance of few players, which unavoidably will have market power, and they have, if you want, the mandate from their shareholders to abuse the market power if they can. So as long as also central bank consumers and firms can fall back on central bank money, then this potential abuse of market power is limited, and if cash is being phased out, then this would be an issue. And last but not least, and that's what Nicolas referred to, that this topic is, has something to do with current international developments. So the dependence on dominant foreign-owned companies, and that's a particularly a topic for Europe. Foreign-owned companies for key functions of society creates vulnerabilities in the context of geostrategic conflicts. And if you have a domestically controlled payment infrastructure, you reduce related risk in the field of payments. It has been well illustrated, but by what happened over the last 10 days. So now the two critical perspectives, and I distinguish two critical perspectives. The first is what I call the fearful perspective. That's basically saying that CBDC will create problems, is dangerous. And the second category of critical views is what I call the dismissive view, saying we don't need CBDC anyway. But first, the fearful view. So maybe the most prominent argument is that CBDC will cause structural bank disintermediation, uncontrolled capital flows, ballooning of central bank balance sheets, centralization of credit allocation with the central bank, and it will facilitate bank runs. I have to be very concise here. In short, the counter arguments are in green here. There are effective controls. You can build them in. You have to take that into account. Obviously, it's an important argument, but there's no reason to doubt on the effectiveness of either hard limits or tiered remuneration. And tiered remuneration is, also not really revolutionary. The point is that CBDC is risk-free and liquid, the perfect asset, the perfect means of payment, but also could be an investment asset if it's too well remunerated. And in a world where central banks want short-term capital market rates for AAA assets to be at minus 60 basis points, you cannot offer free CBDC at 0. It's very trivial. So if you want to give a base amount at 0%, large amounts need to be remunerated negatively. It's not very, original to claim that. So effective controls are possible, are necessary. This can be solved. Second, undue concentration of information on payments of citizens with the central bank. That I would say is also not a problem. One can design CBDC in a way that information on accounts of individuals is not available at the central bank. And I also don't think that this is the most fundamental problem. It's a matter of society to control for, let's say, state or private agents to have undue information. And anyway, it's not the central bank, even with a central database, which will make such a difference, but it can be solved through a decentralized design where we will not have the information anyway. Third, cyber risk, very important topic, again illustrated by current developments, but it's the same as for other retail payment instruments, and central banks certainly need to rely on professional suppliers here, no doubt on this important point, but manageable. Dismissive view, the first one is to say private solutions are highly efficient and ever improving. We don't need anything from central banks here. We are in a perfect world. That's fine as an argument, but not the conclusion is wrong. This is exactly the reason why cash is being crowded out, and I don't see that technical progress should not be taken up by the central bank because of this fantastic progress on digital payments. Why should the central bank be a party sticking with 17th century technology? It's quite the opposite. The reasons why we had coexistence of private and public means of payment just continues to exist, and it's absurd to conclude that the central bank should just stick to 17th century technology. And so I would revert this argument. Then regulation, okay, you can address some problems with purely private payment instruments through regulation. That's being done anyway. There's lots of regulation, including on, competition aspects and so on, but it cannot solve all the issues. If you go through the list of motivations by central bank, it doesn't solve everything. And then third, central banks are likely unable to have a competitive and attractive offer in this field because they are heavy ships, public sector ships. They lack flexibility, creativity, and all the abilities to be competitive in such a dynamic environment. And I would say, first we have to, of course, rely on the existing ecosystem. We have to make it work for us. We should not try to replicate it. We should find a way to preserve a competitive ecosystem around CBDC, with private sector parties having incentives to distribute CBDC, to collect CBDC, to make it a success. That's sure. Now, digital euro projects, now I'll move really to the official part of my presentation. So here we go. We have entered an investigation phase of a project, and that's a well-defined term, investigation phase, in the context of the ECB project methodology, if I may call it like this. So this, has a budget, it has a timeline, it has milestones, it has a governance. It's quite well defined again thing, and it will last 2 years. It has started half a year ago already, and I will tell you in a second what it is about. And at the end of this investigation phase, the Governing Council of the ECB may decide, or you can speculate about the probability to enter the realization phase, which would then be to really, program to tender, the suppliers to build the whole thing and to make it ready for go live. And then there's finally a decision one day on the go live. And what is in the scope of the project investigation phase? Use cases, I mean, there are lots of use cases of payments. Which one do we really want to cover? In particular, in a first go, in the first version of the digital euro. How will be the interaction with the European retail payment market? What will be the business model? Let's not forget that every private payment solution has a business model. And at least we need to say what we have in mind here for digital euro. And we can take inspiration from existing business models. What features and functionalities, example, offline functionality or only online, question mark, lots of legal questions, and at a high level, what technical solutions can handle those issues. And we also have advisory from the market, I mean, consistent with the idea to design that in an integrated manner with the existing ecosystem. And maybe just 2 key questions for the investigation phase that I would like to explain before I stop. So the first one, what is a business model that various players in the retail payment industry are happily promoting adoption of the digital euro? And here you have interesting questions. I mean, the existing payment instrument like cards are typically paid, financed, through a merchant fee, which is then distributed to the various parties. So do we have the same? Or could we argue that the digital euro is a public good and there's no fee, we just distribute it, a bit like for banknotes. But then we have, the question, is that fair competition? So probably that's also not the right approach. So those are very interesting questions once you scratch the surface. And second slide on this topic, there are some interesting trade-offs, and finding the right points on those trade-offs is not trivial either. So on one side, you want to minimize maybe the industry investment costs to make the whole thing cheap, and efficient. But then you also want to avoid undue dependence on providers, and in particular on certain providers. So in an ideal world, you would, preserve competitiveness, and you would have autonomy in the design and in the change of parameters, so that you have no such dependencies on providers, then you would like to offer a distinct value proposition. So if you integrate it totally into existing solutions, then people may say, okay, I don't care, what is behind, whether there's central bank money behind or commercial bank money. If the form factor, everything is identical to existing solutions, yeah, that's maybe efficient in the sense of minimizing industry investment costs. But the consumer may wonder, what's the point? And then last but not least, we also don't want to crowd private initiatives. And I have to stop, I guess, Nicolas. So just to say, there are interesting trade-offs. The principle of CBDC is, I think, can be, affirmatively supported, but there are lots of questions, and that's exactly the purpose of the investigation phase, to find the best answers. And that brings me to the end. Thank you.
Thank you, Ulrich. That was superb. And now, Natasha.
Thank you. Difficult act to follow there. Anyone listening to this WebEx or watching it, if you haven't read Ulrich's paper, I really do recommend it, because it really does go through the different thinkings and some of the fairly thin criticisms once you have a good poke around, and he slaughters them quite well. But I think you should read that paper and indeed the book, because payments are changing really, really fast at the moment. And the discussion that we're having, or and I don't mean we on this call, I mean that society is having, or should be having, around CBDC, isn't a discussion that should be happening solely in the industry. And I think that is probably the biggest task that Ulrich and his peers will face in defining what the CBDC looks like and does, and so forth. Because payments are for everybody. The payment system only works if everybody has access to it. In fact, modern society only works if everybody has access to payments, because modern society is a monetary one. And payments are the only part of money that we all have to have access to. Every other part is a privilege: saving, borrowing, all those sort of things. That's if you're lucky. But even if you're unlucky, you have to be able to pay. And how we do that, how affordable, how accessible, how transparent, how private, how publicly owned, how privately owned, all of these things are being discussed in the CBDC arena, but they shouldn't solely be discussed by those that are thinking about CBDCs, those who are opposed to CBDCs in the industry, and those in the banking industry that are supportive of CBDCs. This really should include wider society. Now, I noticed when the BOE, the Bank of England, had its discussion paper out on CBDC, 2% of the responses came from industry, 21% from private individuals. That's really low. The ECB had a better response rate. If my maths is right, about 40% of the responses came from German males. So it was a very high response rate from individual citizens, very high response rate from Germany, and a particularly high response rate from men. At least the ECB had more responses per capita. I think they had each response represented 41,000 citizens, and in the UK, each response represented 500,000 citizens. So top marks to the ECB on that. Hopefully the Fed can do better. But I think we have to do better than that, because we all have to, not only do we all have to access this new form of money in the future, when tangible money may be, for better or worse, give or take invisible, even if the ECB keeps on supplying notes, we won't necessarily have them in our back pockets. We all have to trust this new system. And therefore, I think it is important that citizens, that public society at large gets far more engaged in these discussions. There's no point society turning around in 3 years' time and saying, I didn't trust money anymore. So that, I would say, is the single biggest challenge that all of the central banks face as they go ahead. And they don't have a natural voice to consumers, particularly on issues of depth like this. So that's difficult. The second challenge, I think, is devising this if the decision is to go ahead, or in trying to make a decision to go ahead, and I would say this is particularly pertinent to the euro area, to the sterling area, and to the dollar area, is you have populations that are incredibly sophisticated on the one hand, very digitally enabled, very digitally savvy, maybe financially literate as well, although those things don't always go together. But you also have a good number of financially excluded, digitally disabled, if I can use that phrase, those that don't want to engage digitally. So how do you create this instrument that's going to work for a future which we don't know what it looks like, but we might be dealing with billions of nano payments per second and all sorts of very sexy ways of paying, and which will stimulate new business models, and at the same time cater for something that's really just a digital manifestation of a physical asset. Nicolas, I shall stop there and wish Ulrich and his peers good luck with these two problems.
It was great. Thank you so much. We have a fantastic group of participants in the audience, including some reasonably senior policymakers, members of the European Parliament and the like. So I encourage everyone to engage. I can also give some of you the floor if you want to speak, but the best way to engage remains the Q&A. I already have a number of questions, so why don't I start there? And the first question that was asked from Richard Eriksson is about all the money that the ECB will get from issuing digital euros. Richard says that if it becomes a success, the ECB will make maybe up to 100 or 200 billion euros, or 1 or 2 trillion euros. What will the ECB do with this proceeds? Buy government bonds? Will the ECB only buy highly rated government bonds or government bonds from all member states? Question to you, Ulrich.
Yeah, that we don't know yet. There's some time before that happens. But just to give the order of magnitude, we have at the moment, it's fair to say we have trillions of excess liquidity of the banks now, and that stems from the asset purchases, the targeted longer-term refinancing operations. So there are trillions, and the order of magnitude of banknotes in circulation, let's say 3,500 euro per capita, with whether you count everybody or people above 18, whatever. But the order of magnitude with around 3,500 euro per capita of total banknotes is 1.4 trillion maybe. So and we have more than this in excess liquidity. So the future, let's say if we are able to issue CBDC and the council decides to issue CBDC in, let's say, 5 years, there will be a lot which will have happened, and it could well be that the excess liquidity which is then present can be gradually absorbed by some CBDC issuance. So there's a long way to go then before our balance sheet has to grow, before we have to buy any new assets in net terms. So that wouldn't worry me. And the intention is not to let the central bank balance sheet balloon in principle much further. And for that, we need to use tools like tiered remuneration, or if unavoidable, limits. But the limits can be quite high, before this is an issue. We don't want the digital euro to become a large-scale means of investment. We want it to be a mean of payment. And for that, it doesn't need to take a total volume, which would, under current conditions, require extra asset purchases.
Natasha, do you want to comment on that?
No. I don't.
Okay.
I'm sure I think it's an eminently manageable problem.
So next question, also relatively narrow, even so everything is big when we talk about these issues. How does it play out in terms of law? Carlos Carpi is asking how the regulatory process to define the digital euro as currency for the purposes of the various commercial codes of different countries in the Eurozone is playing out. Will each country create their own laws on what counts as money, or will it be entirely under EU law without any national variation? How does that work? Ulrich.
I should try. Yeah. No, it's a very good question because for cash, I mean for banknotes, we have a legal tender status. No, cash is legal tender, so it has to be accepted in principle throughout the euro area. But the reality is that the legal interpretation of that is not homogeneous across the euro area. So in some countries, you can contractually waive this obligation. So if the shop, puts into the entrance door, I don't accept cash, that's fine, because then it's a contractual waiver of the obligation. I mean, if you enter the shop, you accept contractually to waive this obligation, while in other countries, the legal tender status is more effective. Yeah. So that's why we have exactly the same question for digital euro. Will there be a legal tender status? And if so, would we attempt to make it really effective, So that's an important question, and we are not the legislator on this. So legislation on legal tender would have to come from the co-legislator at the European level, including, let's say, the attempt to really make it homogeneous within the euro area. And we are closely collaborating with the Commission on all the topics where the legislator has to come in, and legal tender is not the only one.
Natasha?
Well, I don't think the euro area wants a British person commenting on what should be legal tender or not in the euro area. But I think money is what we accept it to be, and I don't think a CBDC changes that. I mean, I guess the only question I would have is, will my tax authority accept my digital pounds or your digital euros, in your case, Nicolas, you're in the States, your digital dollars, are they acceptable for taxation? That is the core question all of us have to ask, and the answer will be yes, I should think.
So then another question from Pierre Raffi on, which is a follow-on question on privacy. So he's asking, notwithstanding that CBDCs could be designed to protect privacy, realistically, considering early forays, as we see in China and other countries, is it a realistic assumption? Will people really believe what you're saying about the fact that, the ECB is not having total information awareness, as was said once in the US, of everybody's transactions?
Can I have a go starting at this one, Nicolas? I mean, I think this is a difficult one, because, again, for the central banks, because the average consumer has not thought about privacy in relation to payments, and all of a sudden they will be, or are being presented with the prospect of the CBDC and the central bank having insights into their private data. The central banks can choose to set, can set a sort of a watermark of privacy, which the private sector hasn't done and won't do. So it will be challenging for central banks. It is challenging for central banks to have this discussion. I think as we sit here in the West, it is perhaps unhelpful that China has taken has moved forward on the CBDC, and generally in these parts of the world, we tend to look at China's surveillance as being quite significant, and so that necessarily has some Orwellian echoes for the average person. But central banks are not going to be making money out of our data, and I think it's that conversation that can be had. So if they don't need to monetize the data, they actually can do, have a lot less of it and hold on to a lot less of it, if you like, than the private sector. But with that, I'll pass to Ulrich.
Yeah, thank you, Natasha. And just to mention it, I mean, your book covers those topics very well, because they go beyond CBDC, of course. They are universal topics in digital payments. And I think at the end, the central bank doesn't care so much about those topics. First of all, we have to apply, of course, all legal obligations our starting point is the legal obligations applying to digital payments. No, so total anonymity is not foreseen currently for digital payments because of compliance, AML, anti-money laundering directive, you know, every electronic payment is subject to possible, you know, checks from this perspective, and we don't have any view on it. So I think we have the privilege as a central bank to accept, you know, whatever the co-legislator will tell us. We will happily accept it. We will apply existing regulatory frameworks, of course, the GDPR, the data protection regulation in the EU. We are happy to apply. You know, that's a matter of preferences of society, and we as central bank here, we have the privilege that we don't. It's not our job, you know, to decide on this. So we happily take, you know, guidance. The only thing is, you know, if let's say society would have a preference for digital euro differently from other electronic means of payment, to allow for small payments being, you know, almost totally anonymous, then we are happy to take that. We just have to translate it technically, and that's then our job. But I find we have a privilege here that it's we don't pretend it's our responsibility to make those choices. We are happy to, you know, get guidance. The legislator can legislate, and we only have to see that it's implementable and then to implement it.
So let me move to questions which are more about the fundamental issue. So Pierre Raffi again is asking how that changes the role of central banks, basically, especially what should be the roles transnational. What would be the roles transnational and national central banks, the role of commercial banks, including savings banks and credit unions, new players from the non-bank financial industry, mentions Libra Diem. What is the change of the architecture here? And related to that, a question from Ignazio Angeloni: is the Ukrainian crisis likely to increase or decrease the attractiveness of CBDCs for governments and individuals? And a question from Frederick Bistedt on whether there is a need for more coordination between central banks as regards more specific design issues, for example, tiering, remuneration, caps, access to foreign investors, etc. So for me, all these things are linked, because it's really about how the way we think about central banks, especially in an international context, maybe in a Basel context, is going to change, and whether the very framework of central banking and international implications of central bank activity may be affected by the emergence of CBDCs. So Ulrich first.
Okay, those were quite some questions, but I try. I mean, I got 3 questions. So the first one, which players will be part of this ecosystem, which should distribute and or collect and play any role in CBDC or in digital euro? And there, so far, our formulation in our official publications has been regulated entities. So, but that's a relatively broad expression. It should, include obviously banks, but also other payment providers which are licensed in some way. And the general philosophy is probably openness. You know, that the existing players can all play a role, even in a competitive manner. Then we have to translate that into practice. But we are open. We are open to any sort of regulated entity. But naturally, the banks have most of the customer relationships. And as a customer, we should leverage on existing customer relationships. Therefore, I cannot imagine that banks will not play an important role in this field. Then the Ukraine question, Ignazio's question, I guess the appetite will increase, because we have seen that payments are, we knew this before, but we have been reminded at an unprecedented scale that payments are an instrument of sanctions. And, if we take a long-term perspective, sanctions, everybody can sanction everyone if anyone is bad or is perceived to be bad. So therefore, for sovereignty purposes, some, independence and national infrastructure in competition, of course, with also global players. We should, preserve this competition for sure, but maybe have a fallback solution under domestic governance. And I guess the events increase the appetite from this perspective. And then the coordination between central banks. Yeah, I mean, if we look at the many constraints and challenges that we have in a practical project, like we have at the ECB, then it's good to also think about international collaboration. But reality is also those projects, they move forward. The PBOC has moved at a much earlier stage. We are moving now. The White House has just issued a bullish request to work on CBDC also. So I mean, the US will work on it under its own national considerations and constraints, and we are talking about an international fora, and interoperability is great and nice, and let's see, but it's not easy to from the outset also go for something very similar or even interoperable. But we keep it in mind, and certainly we need coordination. That's a different question. We need a coordination in the sense that the rules of the game for international use should be agreed collectively, because the uncontrolled cross-border use of CBDC has indeed huge potential for capital dislocations and so on. So that should be based on an agreed collective framework, how that will happen. And I think everybody agrees with this principle. The first releases of central bank digital currencies are for domestic usage, and then we will see, but I think there's a will to fully collaborate on this.
Just to follow up on this one, because it's so important, and probably we'll have another session of financial statements about it, but there are a number of processes at the Financial Stability Board and the Bank for International Settlement for exactly what you're talking about, agreeing on a minimum basis of standards for the international use of CBDCs. Are you satisfied with that process? I mean, you will probably have to say yes, but can you give us a little bit of color?
Well, I mean, again, I would distinguish the two topics. Interoperability and commonality in design and so on. There I would say not so much is really happening in practice, because people, once they start, they look at this as a domestic retail payment solution, and therefore they focus on other things, frankly, even if the idea that you start from the first second to think about interoperability is not denied. That's one topic. The other topic is the international usage and the necessity to collaborate on it, and that's undisputed. And because those projects are all, first of all, domestic retail payment projects, I don't see any issue. Once it moves to different levels, international usage, there will be discussions, and I'm not worried about that.
Natasha?
Yeah, well, I suppose anyone that didn't think that payments and currencies were powerful 2 weeks ago has certainly been reminded that they are now. I mean, it was interesting. I was on a discussion about CBDC a couple of months ago, and one of the parliamentarians said, "But isn't this just about the central bankers trying to keep control?" And I said, "Well, yes, but what would you expect? They're in charge of monetary and financial stability, and if they're not in control of money, then it's difficult to see how they can do that." Will the current situation create a race? Well, as Ulrich said, the Biden administration has certainly moved fast this morning, probably before most Americans were up. Russia's found itself without the two major European card networks. Probably fortunately for Russia, the two US card networks, sorry. We'll have the European one soon. Russians, fortunately for themselves, make about 30% of their payments in cash. So there is a big cash infrastructure, even if there is high inflation, that still kind of works. That would be much more problematic, I would imagine, in the UK or Sweden, suddenly not having the cards working anymore. Well, certainly in the UK, where we're totally reliant on the card networks, that would be much more problematic. But one could certainly see countries looking at Russia and Russia looking at itself and saying, yes, okay, time to move on this, or at least to consider it. But I mean, we know that the EU has been looking at this and thinking about this for some time. I don't think the answer has to be a CBDC, but there will be cases where for sovereignty of the payment system, that will be the best answer. The only sort of caveats I'd have with that is, you know, there's data storage, there's technology stacks, there's all sorts of other ways that power can be filtered down to squeeze off pipes. And certainly if you're a small, you know, a smaller country, maybe an island nation, you might not have the whole technology, so you're going to have to partner up with other people and be happy with other providers. But people will choose them, I think, very, very carefully. I think the selection process for all these CBDC providers is going to be quite an intense national security effort. So it'd be very interesting to see how the ECB does that, given its transnational situation.
And indeed, we have a question which we certainly wouldn't have had 2 weeks ago from Soumya Surendran. And that for you, Ulrich, how do you make sure that the ECB CBDC still functions under war conditions? Because cash works very well in a war zone.
Yeah. So first of all, you know, there's no intention of the central bank to discontinue cash from its, you know, perspective, and even the contrary. The ECB supports work on maintaining the usability of cash. So that's we are not against cash, and cash has unique features in terms of resilience and in terms of inclusiveness. So if it continues to be used, we are just fine with it. And then, you know, on CBDC you can build in some resilience. So if you have offline solutions and offline wallets, I mean, that gives you some resilience. So if the internet is down, you can still pay bilaterally then, and those solutions have potentially weaker security, because of course if everything is online, you can always check against the central, you know, account if the money is there and so on. So it has some drawbacks, but for smaller amounts it's fine, you know. So you give it some resilience. But it's a good question in a digitalized world, and that's not only in the field of payment. Vulnerability to cyber and to outages, electricity outages, is unbelievable and an enormous problem, of course.
So we have now more questions that probably we will be able to answer, but there are some great questions out there, and I want to try to cover as much as we can. Starting with Reinhard Bütikofer, I mentioned that we had members of the European Parliament around. Reinhard is asking, considering the geopolitical competition that we are increasingly faced with, how is the race between different CBDC projects worldwide going to impact on and be impacted by political strategies pursued by China, the EU, and the US, to mention only three?
If I start, yeah. So I don't see it so much as a race for now. You could say international usage of currencies and, you know, electronic central bank money available at the international scale is a topic for the future. But the projects we have currently are, again, they are domestic projects. So all the investment that the People's Bank of China has been doing into ECNY are investments into domestic retail payments. And, you know, one can always speculate, yeah, but then it's a first mover advantage for international payments. But it's a bit a different topic, yeah. We should not put everything together. So my feeling is that the race is a domestic race. Of course, central banks are herd animals, and if the others are doing it for domestic reasons, we also want to do it for good or bad reasons. But it's not a competitive race, I would say. It is maybe the same factors in all countries, and the international usage is a different sort of CBDC, and that's not the key focus as it has been so far.
I will note mention you made that central banks are herd animals. Natasha?
Well, I would just say this is an uninformed outside observer. Looking at the amount of output from Basel and from the ECB, the Bank of England, the Bank of Canada, the RBA, Singapore, MS, I can go on. There has been really quite a small voice coming from the United States. And this morning, that voice ratcheted up a notch. I think there's it may be one thing that your CBDC is designed to solve a domestic problem or not, or you decide there isn't a domestic problem that needs to or can be solved by a CBDC, and you decide not to have one. And that should be the paramount thinking, I think, in every central bank's mind, and I think it is. But then there's also international norms and standards. And from my uninformed viewpoint here in Upper Mountain in Wales, it would seem to me that the United States might have been a little less involved up till now in some of those discussions, just because there has been so much work done by so much, if one's to judge it by the amount of paper, of which there's been an awful lot, and the amount of involvement in conferences and the BIS discussions and so forth, the United States doesn't seem to have been enormously present. Would any of the outputs have been materially different, and the thinking be materially different, and the direction of the standards be materially different if it had been involved? I don't know that that's the case. Maybe not. But I do think from a standards, and I don't mean a technology standpoint, standards standpoint, although those are incredibly important. I do think from that side of things, it is a bit of a race for influence, and it should be. I mean, these are important discussions. Clearly, a CBDC in the United States can be completely and utterly different from one in Russia, and they don't need to inform each other. But I would imagine in a CBDC, as in all other areas of payments, you want to show leadership.
So there's a somewhat related question from Korchar about decentralized finance, right? If we have a DeFi, a decentralized finance society movement, ultimately prevailing in bypassing a government-controlled means of payment, could that happen quickly? Is it a distant consideration? Is it completely utopian and never going to happen? I'd like to have your view, both of you, whoever wants to start.
Natasha, if you start on this one.
Okay. Well, I think, I wonder whether that whole ideology has not taken a big hit. I mean, the financial sector, finance, currencies, payments, they're on the front line of this non-battle that the West is having with Russia. And, it's because the dollar, the euro, and the pound that London, Frankfurt, Paris, New York are big financial sectors, and so forth, that there is this capability of putting on pressure. Whether that pressure will result in different actions from Russia or not, I don't know. But if a country's first line of defense does lie in its financial sector and its currency, then is it not unpatriotic to undermine the currency and to want to move away from any government-controlled form of money? I think that'll be an interesting discussion that sort of will start to happen. I mean, I would imagine in Russia, it's already unpatriotic to use crypto to convert your rubles into crypto. I haven't read the Russian newspapers, but my best guess is that's what they would say. But if we want to remove that power from our governments, what are we going to replace it with? Nuclear weapons, boots? There's lots of questions, I think. And that's without going into the money laundering, the illicit finance, all of those sort of things. Who's going to police this Neverland? And, would we prefer somewhere that's completely and utterly unpoliced with all that could bring? Ulrich.
Yeah, and what is also unclear is, of course, that you on one side you have unbacked crypto assets like Bitcoin with a lot of questions, starting from energy efficiency and then to illicit uses and to resilience for future technological developments. So lots of question marks. which for me lead to the conclusion to discourage everyone to invest into this direction. And indeed, you can use it maybe in some circumstances, at least those who the doctrine of decentralized finance and of Bitcoin is that it's good because it can be used also in states with a bad government and excessive control and so on. But maybe the assumption is that there are overall more good governments in the world than bad ones, and that for the bad governments there should be maybe first best solutions, ideally that they become good governments. And so I would say the net for society is not very positive. Yeah, therefore I would say, I mean, CBDC maybe is one way to here allow for digital payments and maybe flexibility to also use it then at occasions where it's helpful for others, maybe outside a certain country, for usage, if the sovereign wants this, if the government of the issuing country wants that. So it gives some more flexibility. Yeah, I mean, the stable coins, they are anyway at the end, I think, if you see how they have developed from the first ideas to what they are now, they have mutated, I think, into kind of currency-backed e-money endeavors, and therefore they are not, very DeFi at the end, like, they can use somewhere DLT, but it doesn't make such a difference in my view. So you are left with the pure crypto assets, which have a lot of issues in my view. Yeah, thanks.
Just on that, a question from Rebecca Christie. Is there a way to engineer the CBDC so that it wouldn't cause environmental harm as Bitcoin does, with consuming enormous amounts of energy for mining, etc.? I mean, how can you give a quick answer to that one, Ulrich?
Yeah, that's trivial. I mean, the construct of Bitcoin is crazy in this respect, and we don't need such a crazy construct for a centralized infrastructure. I mean, they consume very little energy, and this is not only CBDC. This also holds for credit card networks and all sorts of solutions. So, I mean, Bitcoin is an absolute outlier.
We have plenty of other questions, and I apologize to all those who have asked them. We won't have time to answer them. I want to finish maybe by circling back to what Natasha was referring to in her introductory remarks, that a discussion about CBDCs has to be with the whole of society in a way, shouldn't be captured by special interests. So there's a question from Stefan Schmitz asking, why is the ECB restricting its own innovative capacity by the large role banks play in the project? For example, in the advisory group, banks are already heavily subsidized. Giving example, Europe is overbanked, banks are inefficient, slow to digitalize. The ECB's, I read, fearful approach to innovation reduces the likelihood of success and hampers innovation in the banking financial system too. Ulrich, do you want to answer that?
Yeah, great question. No, I mean, the ECB has taken the approach to say CBDC is not there to change the financial system and to crowd out banks. So we are agnostic. We don't say, I mean, we would not use those let's say critical words towards banks. I mean, the CBDC is a neutral project in terms of that we want to change the financial system, or so we don't want to change it, or we want to control the thing in a way that it doesn't change. That's at least what current policymakers have in mind.
But we also have questions about this from Lion Lee and Bastian Yazbek. Is it possible to imagine it wouldn't change? Because in a way, there is this view that CBDC change everything, and therefore you have to rethink the whole financial system. So you cannot envisage it from a position of continuity in terms of the broad framework. Do you think one can?
Yeah, the world is changing, payments is changing, financial systems are changing. So it's difficult to say in 20 years' time, we will still, or policymakers will still have the same conclusions as today. That's impossible.
Yeah.
Natasha, you have the final word.
Oh dear. I mean, I think in some cases, I think it's possible to think of a CBDC as really being a framework for digital currencies. I mean, there may be digital currencies like the CBDCs, like the sand dollar, which are all singing, all dancing, you know, sort of virtually tangible CBDCs. But you could equally well think of a central bank coming up with a framework for a digital currencies, which enable a CBDC within it. But I absolutely don't think it has to displace the banks. The CBDC has to. I think many other things may cause the displacement of banks or the mergers of banks for tech companies and so on and so forth. But I don't think it's a CBDC that does that. If anything, I think a CBDC could perhaps move to level the playing field between tech companies and banks.
To both of you, this was an extraordinarily rich and for me enlightening conversation. I only wish we had more time, but here is where we are. The next session of financial statements will be in 2 weeks on the 23rd of March. We'll start half an hour later than usual with Sergei Goryev, and my colleague Jacob Kierkegaard will discuss, of course, Russia and its financial system, because that's what we talk about. Thanks again so much to Ulrich Bindseil from the European Central Bank, from Natasha de Terán, co-author of the Payoff, and have a very great rest of your day. Thanks.
Thank you, Nicolas. Bye-bye.
Bye-bye. Thank you.